Good morning, everybody. Hey, welcome to Friday, May 10th. Man, just think about it. We won't be long. We'll be halfway through this year. I want to thank you for joining us this morning. I want to remind you again of the free report that we're offering when it comes to Social Security and how that's going to play a big role in most of our retirements. And so as you get closer and closer to that age of, and I'm going to say if you're 50, 55, you need to start taking a look at these numbers and start looking at the choices you're going to have. And obviously, the closer you get to retirement, the more you need to be paying attention to what options you have and what makes the most sense. And I was at the Ed Slott conference last week in Dallas, and learned a lot of techniques that I think people overlook when it comes to Social Security planning, especially if we're married. And so I want to offer you this free report on Social Security. And so all you have to do is text the word security to 863-285-3815. That's right. It's that easy, folks. Just text the word security to 863-285-3815. Hey, we're going to get started the show in just a few moments.
You're in there. Well, good morning. It's 8:41 here, day one to 25% tariffs on everything we buy out of China. And the world was supposed to end. Funny, it hasn't. Let's find out what's going on with the markets this morning early on and head downtown to Sebring's offices of Statler Financial Services, where Phillip Statler is standing by. Phillip, good morning. The world's still here. Are you amazed?
It is at 12:01 this morning. The tariff went from 10% to 25%. So, but they tell me that we won't see any indication of that until 3 to 6 months down the road.
And the other side of that, too, I've got into a discussion with some people on a Facebook news group that I hang out on, too. Got to keep in mind that a whole lot of the stuff that goes in there, how much of it is China going to eat in order to stay competitive? Because remember, they've got Japan and Korea as competitors for a lot of the electronic goods that they do. And about 30% of our imports out of China remain consumer electronics and computers. So, yeah, what the exact impact is going to have on your pocketbook and mine is really something nobody can really divine, because nobody knows how much China is going to eat in order to keep their products competitive.
Well, and that's true. And it could be a boom for those other places that we like Japan that we get electronics from. The tariff to China could be a benefit to them.
Oh, yeah, over in Korea, you can bet your lips that they're just smacking their chops in the boardroom at Samsung, for instance.
Exactly. They're thinking, hey, this is a great opportunity for us.
Without a doubt. So the tariffs are in, and one of the things I noted this morning that you caught a news item on that didn't surprise me any, but I hadn't seen. Chinese markets, Shanghai, the major Chinese indexes, Hong Kong, they're all going up this morning. As a matter of fact, the big Chinese mainland index was up like 3% this morning, and my first reaction was, huh? You found a news item that explained it, huh?
Well, I did. I saw a little article that talked about how, China being the government they are and the economy they are, they as a government can go in and start buying those stocks and pumping up that index. So that seems to be the indication there.
It makes sense, too. I mean, a command and control economy, everybody's worried about Chinese markets because, the trade war we've had with them has been not good for them whatsoever. We get this big tariff thing. You can bet the order went out from the government, buy it, people, and nobody really argues with the Chinese government over there, do they?
No, they don't. You're right. Nobody argues there.
Absolutely. We start out the day on our side of the pond with some economic news that came in either a little better than or about where expected, and that's consumer inflation. Prices overall up by 0.3% to consumers last month, and that brings our yearly annualized number up smack dab even with what the Federal Reserve said they wanted, 2%, which kind of means predictability is in the offing coming out of the government, right?
Well, that's true, Dave. I mean, the numbers were actually a little bit lower than expected. We expected 4% or 0.4% on the overall CPI. Came in at 0.3%. The core was expected to come in at 0.2. It came in at 0.1. So good things there. We're right at 2.1%. which is what the Fed wants. It's lower than where we were this time last year. Last year we were at 2.9% at this point if we looked at the year-over-year numbers. But hey, I think it's a good thing that we're where the Fed wants us to be, and it should give us some stability there.
Absolutely. And predictability is a watchword that investors generally feel comfortable about. If we don't know what the Fed's going to do, that just gives rise to even more volatility. So they may be hoping for lower interest rates, but knowing that we're not going to do anything beats worrying about what they're going to do, doesn't it?
Yes, I agree. It's to know the interest rates should be stable, at least for now, for a little while, is a good thing.
Absolutely. My news ticker was just buried in articles about, we're going to die over the tariffs. But I know you were able to dig, and earnings season is yielding a lot of quarterly results as well this morning, isn't it?
Yeah, it is. So we've got a slew, and they're kind of a mixed bag again this morning. We got Marriott coming out, one of my favorite places to stay. And so they're up. They beat by 7 cents a share. Revenue, however, missed what the street thought they should come in at. And Marriott said, though, that their North American profit margin was higher. Yep, despite they're having an increased labor cost because of unemployment's not there, and they had a modest revenue growth, and so there's some. I guess because of that, the traders are a little concerned. So they're trading down this morning about 3.3%. Let's look at another kind of travel-related company, and that would be Booking Holdings, which is the old Priceline. It's the parent company of Priceline.com. And they missed. They were 10 cents below estimates. Now, remember, that's a high-priced stock. So their adjusted earnings were $11.17 a share. They missed by 10 cents, which in the scheme of things is probably not a big deal. They also missed on the revenue side, though. But they came out, this is one of those cases where the last quarter didn't look real good, but going forward, they think they've got revenues on rise for this next quarter. They've got a lot of good things that they think are happening this quarter, and the traders are liking that. So they're trading up this morning 3.4%. So, kind of a mixed bag there when it comes to travel.
Absolutely. I'm beginning to pick up a pattern here, missing on revenue and making more in terms of profit off of a lower revenue picture. That seems to be a pretty common story these days, doesn't it?
It does. It does. And let's keep the travel industry going a little bit here. Let's go to Wynn Resorts. The casino operator. They basically came in a penny ahead of estimates. Revenue was just a little bit below what was expected. But that they've really focused on came from the Macau casino place over in, I guess it's China or Thailand, wherever that's at over there, was off. And I remember we've talked about that before, that area has seen a decline in gambling revenue. But they're trading down this morning 4 3/4% before the market opens up.
They're one of my big losers. I was wondering if they were reporting or whether Marriott was dragging them down.
No, that's a report all on their very own.
Luck them.
Yeah. Another hot name, Dropbox.
Yeah.
A lot of people use Dropbox to file transfer and to store their stuff. And they came out 4 cents ahead of estimates, and they made a profit of 10 cents a share. Revenue was ahead of expectations. They had more paying customers this quarter that they added, and they're seeing more dollars per user, which is also two good key indicators that we like to see in the metrics of trading. And so they're trading up 6 3/4% this morning before the market opens up. Another big one. I'm sorry. Go ahead.
Dropbox being included in Windows 10 as being a free service for the little tiny allocation. Seeing them actually making some money off of all those subscriptions is good news for Dropbox. They may be an ongoing concern after all.
Yeah, I think so. I mean, just like Dropbox, you got Box.com. So you got a couple of those guys out there. So it is. I mean, I use them. They're definitely a help in my business. So this one, I don't know. This probably doesn't show up on your big winners list, Dave, but it will be a big winner for you, and that's Zillow, the real
Ooh,
estate. Yep, the real estate website firm. Love it. Zillow lost 33 cents a share, which sounds terrible, but that's
what were they supposed to lose? That's
there's
always the
yeah,
question.
that's right. That's the key, right? They're supposed to lose 35 cents a share. So they beat on that area. And here's probably the key thing that's helping them the most is that their revenue beat forecast, and they've increased revenue by 51% compared to a year ago. Um,
Hmm.
and they've got more people going to their site looking at real estate. They're trading up this morning over 15.5%. So up over 15.5% this morning.
That's good to hear for a company. I've always wondered about how they make money off of that business model because about half of us have their app on our cell phones and I don't know how they make money.
Well, realtors use them too, right? Because they post pictures up there and they put their information. Hey, if you like this house, call us. And so
Oh, yeah.
they're paying for that service. Uh,
Understood.
yep. Hey, one of the ones that we've talked about in the past having some struggles is Yelp. Um, and so they're trading down. I don't know if they're on your big losers list, but they should be close. They did earn 2 cents a share, but that was basically kind of in line with what was expected. And so revenue was higher than expected. So you'd think, okay, it should be doing well today, but they gave weaker than expected guidance for the rest of this quarter, and they're trading down a little over 8.5% this morning.
Ouch. Yelp's
Yeah,
reviews on Yelp were not that hot, right?
I guess not. I guess not. The last one I want to talk about is GoPro. GoPro, we haven't
Oh,
talked about them in a while because they seem to be
no,
not
advertising.
really not a real big thing in the industry anymore, but they are. Uh, they had a quarterly loss of 7 cents a share, which was 2 cents better than expected. They beat on revenue and they raised their full year forecast. I guess they've come out. I have not seen it advertised, but I guess they've come out with some new high def action based cameras that are really picking up on the sales line, and so they're trading up almost 6% this morning.
Cool. Something new to strap to my bicycle helmet, I'd imagine, right?
There you go.
Could very well be. So, setting the table for this morning off of the mixed bag picture we got out of Wall Street, we're seeing reports again. Like I was saying, it sounds like they're making revenue and making more money off of lower revenue figures. Yesterday, a dead day in Wall Street. We went down over jitters over the tariffs. Dow was down 139 points. Nasdaq down by 32 and a half. S&P down by 8.5. Kind of like yesterday morning, though. Not as bad as it looked early in the morning, but everybody was down by close to 0.5%. 45 minutes before we open, with China bailing their markets out, we don't do that junk, so I'm betting we're not half as good as the Chinese markets are looking this morning, Phillip.
No, we're not, Dave. When I first looked at it, it wasn't real bad. We were really on the borderline, bouncing between green and red. But we didn't talk about this at the beginning. But the president came out about 7:45 with a tweet. And basically that tweet was about the trade, and I don't have it right off the top of my head, but it wasn't a good tweet, and so the markets at that point took a big dive down. He actually deleted that tweet since it came out, so right now the Dow's down 130 points, which is 0.5%. S&P 500 is down 0.6%, $18, and the Nasdaq's down 0.7% at 52. Gold and silver are both tracking up just a little bit, and crude oil is, I don't know, it looks like it's about where you and I talked yesterday, but up from where it closed, $61.78 a barrel.
I think we're starting to see a trading range in there until something gets settled in the Middle East and in Venezuela. World markets, like we mentioned, Chinese markets all traded up because the government said they were going to. Japan isn't as regulated, so they were off. Europe's a little up this morning, basically on the investments over in China, I'm going to assume. Phillip, somebody want to get some advice as to insulate one's retirement from all these gyrations in the world. How do I find you on the phone?
Dave, give us a call at 863-382-0037. I think it's a great time with all this volatility, again, to have an x-ray report to make sure you're not taking on too much risk in your portfolio. And then join us on our website at statlerfinancial.com and Facebook. Like our page, Statler Financial Services. And then, of course, join us every weekend for the Statler Financial Radio Show noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730.
And always remember, if you're out of town, you can stream us at newstalk730am.com. Phillip, thank you so very much. You have a dynamite weekend, and I appreciate another week of great information.
All right, man, you take care. Have a great weekend. I'll talk to you on Monday. Hey, I hope you enjoyed the show today. Some great conversations. It's been a down week this week in terms of the stock market as a whole, at least through yesterday. But again, I want to remind you of our free report on Social Security. For most of us out there, Social Security is going to be very important for our retirement. So all you have to do to get your free report is text the word security to 863-285-3815. That's right. Text the word to security at 863-285-3815. Have a great day. Have a great weekend. And I hope you join us again on Monday.